Hire purchase system is an agreement between two person, hire purchaser and hire seller. Bank account auto hire purchaser account. That means we are receiving the installment. See, this amount is inclusive of interest, no? So this method is inclusive of interest. We'll discuss on ledger entries in the books of hire seller. Hello my dear students. I am your AJ sir, faculty, Department of Commerce and Management, Vidyashram First Grade College, Mysuru, a temple of excellence. My dear students, today's session is all about financial accounting to second sem BCom, and the topic is accounting for hire purchase systems. In the previous session, we were discussing on the journal entries and ledger entries in the books of hire purchaser. And in today's session, we are going to discuss about journal entries and ledger entries in the books of hire seller. So you can expect this type of problems for 10 marks. So journal entries or ledger entries in the books of hire purchaser, 15 marks. Journal or ledger in the books of hire seller, 10 marks. You can expect this type of problem for 10 marks. Very, very easy. And if you know journal entries, ledger is automatically you can do that. Next one. So what is the meaning of hire purchaser? Hire purchase system is an agreement between two person, hire purchaser and hire seller, where hire purchaser purchase the goods or any article from the hire seller on hire purchase system. So for that he has to pay the first day he has to pay the down payment, and after that every year ending he has to pay the installment with interest. Now let's go to the next slide. See, this is the format of journal entries in the books of hire seller. See, journal entries in the books of hire seller. See, in the previous problem, we were discussing about journal or ledger in the books of hire purchaser. See, I am the hire purchaser. I prepare journal entries or ledger entries in the books of hire purchaser, hire seller account. In the books of hire seller, hire purchaser account. So, we are doing problem in the books of hire seller. So hire seller will prepare the accounts and he will write account name called hire purchaser. See, I am the hire seller. I am selling the assets to hire purchaser. So when I sell the asset, who is the receiver? Hire purchase is the receiver. That's why debit the receiver, credit the giver. Debit what comes in, credit what goes out. So when I sell the asset on credit system or hire purchase system, so hire purchaser receives the asset, so debit should be hire purchaser account debtor to asset account. So asset should be credited. Why? Because asset is going out, debit what comes in, credit what goes out. See, that is compound journal entry. So hire purchaser is a personal account, asset is a real account. So when asset, personal account and real account compounded, then it is called as compounded journal entry. So next one, bank account auto hire purchaser account. So we are receiving the down payment on the same date of purchase or on the same date of sale of asset. So we have to receive some amount of down payment, maybe 10% of the actual cost of the asset we will receive the down payment. So debit what comes in, we are receiving the money or we are receiving the check. So bank account, so we can write bank or cash account here, but usually we use bank account. Okay, because usually in business we do bank transaction, that's why we use bank account. Bank or cash account debtor to hire purchaser. Who is the giver? Hire purchaser is the giver. So that's why hire purchaser is a personal account, credit the giver. So bank is a personal account, debit the receiver. So when he gives the amount, who receives the amount? When he gives check, so bank receives the amount. That's why bank account to hire purchaser account. So bank is also personal account, hire purchaser is also personal account, debit the receiver, credit the giver. Next one, hire purchaser account to interest account. What do you mean by that? See, in the books of hire purchaser, what we are writing, please remember, interest account to hire seller account in the books of hire purchaser. But here we should write hire purchaser account to interest account, being the interest is receivable, or due we can write. So this is our income for us. Next one, bank account to hire purchaser account. That means we are receiving the installment. So we are receiving the installment, journal entry, bank account to hire purchaser account. Debit what comes in bank for amount is coming for the bank. So bank is a personal account. Bank account add to hire purchaser account. Who is the giver? Hire purchaser account, the giver. So debit the receiver, credit the giver. So being first year installment received. Next one. Now for us interest is a profit. For hire purchaser, interest, paying interest and calculation of depreciation is a loss. But for the hire seller, receiving interest is a income for him. So he will transfer that income to profit and loss account. So interest account debit to profit and loss account. So when you write the profit and loss account in credit side, that represents the profit. Debit, what nominal account says? Debit all expenses, credit all incomes and gains. That's why, so if you write the profit and loss account in credit side, that shows we are receiving the profit. So interest account had to hire profit to profit and loss account. So in the books of hire purchase, what you are writing? Journal entry. So profit and loss account are to interest account, to depreciation account writing. No. So we write interest account are to profit and loss account, because this profit and loss account represents the profit for the hire seller. So in the first year, we should show 5 entries. One entry for purchase or sale of asset. First entry is the sale of asset. Second entry for the receiving of the down payment. Third entry is we have to show the interest is receivable. So interest is due from the hire purchaser. Next one, we have to show the interest and installment. We are receiving the first year installment. And the fifth entry, we have to transfer the interest to profit and loss account. So 5 entry for the first year. From next year, no selling entry, only once we will sell the asset. No down payment entry, only once we will receive the down payment. From next year, we should calculate hire purchase account to interest account, being the second year interest is receivable. Next one, bank account to hire purchaser account, being the second year installment received. Next one, interest account to profit and loss account, being the second year interest transfer to profit and loss account. Like this, for the first year, 5 entry. Again, I am repeating. For the first year, 5 entry. First entry for selling of the asset. Second entry for the receiving the down payment. Third entry to show the interest is due from the hire purchaser. And also fifth entry for receiving the installment. So installment includes principal and interest. Next one, last entry for transferring interest to profit and loss account. These are the 5 entry. From next year, for example, in the question, they will ask to prepare journal entries for or ledger entry for 3 to 4 years. Okay. So from next year, for first year 5 entry, for second, third and fourth year, you will be having to write 3 entries. What are those? Only purchase entry or sale entry only once. Receiving down payment entry only once. From next year, we have to show the interest is due or interest is receivable, receiving the installment. Third one, transfer to profit and loss account. These are the 3 entry for remaining 2 or 3 years we have to show. I hope you are understanding. Let's go to the problem. First problem, on 18 Jan 2009, Sony Travels purchased 2 motor cars costing rupees 3 lakh each. So how many cars he purchased? 2 motor cars. What is the amount, or what is the actual amount for one car? It is 3 lakh. So for 2 motor car, it is 6 lakh. So 3 lakh into 2 cars equals to 6 cars. Next one, the terms of payments were: the Sony Travels, who have purchased the asset, is the hire purchaser, and also Vikas Motors is the hire seller. So Vikas Motor is the hire seller, Sony Travel is the hire purchaser. So here Sony Travels has to make 25% of the cost of the asset as a down payment. See, the cash value is to be paid as down payment. So what is the cash value? Is the 6 lakh. On this 25% he has to pay as the down payment. Next one, balance amount is to be payable in 4 equal installment of rupees 1,38,900. See, this is in this amount. Let us see whether interest is inclusive or exclusive. See, 1 lakh 1,38,900 he has given. Okay, into how many installment? In 4 installment they have to pay. Let's check. So if the amount exceeds 6 lakh, then the amount is inclusive of interest. If the amount is equals to 6 lakh, then it is not including interest. Into 4. So it is 1,38,900 into 4. So that is 5,55,600. So 5,55,600. And here we have paid 25% of the down payment. Let's check 25% of the down payment. So 6 lakh into 25%. So we have paid 6 lakh into 25%. We have paid 1,50,000 as a down payment. See, once again I am repeating. So this is 4 equal installment. We have paid 5,55,600, and as the down payment we have paid 25% of the down payment is 1,50,000 we have paid as a down payment. Total is 5,55,600. Totally we have paid 7,05,600. So what do you mean by that? See, this amount is inclusive of interest, no? So this method is inclusive of interest. So we have to separate the interest is separated should be from the principal amount. Then we will get the actual, what is the actual principal amount and what is the actual installment. So here actual cost of the machine is 6 lakh. So he has to pay the 25% down payment. Remaining amount he has to pay in equal installment. How much amount? So every installment he has to pay 1,38,900 rupees. This 1,38,900 rupees is inclusive of interest. In this inclusive interest is already included. So 7,05,600 will make. Actual cost of the machine is 6 lakhs. So remaining 1,05,600 you are paying the extra amount is the interest. I hope you are understanding. So extra amount is the interest. That means this 1,38,900 is inclusive of interest. So we have to exclude the interest. We have to calculate the actual principal amount. That is the problem. We will check while calculating in the principal, interest and installment. We will do the table now. In that table, we will understand that. Next one. Vikas Motors charge interest at rupees 9%. So every year he will charge 9%, and depreciation he will not give because we are doing journal entries in the books of hire seller, not hire purchaser. So in the books of hire purchaser we need depreciation. Why? Who is the one who holds the asset, or who is the having the asset? Hire purchaser is having the asset. So he has to give the depreciation. So in the books of hire seller he doesn't need to calculate the depreciation because you don't have the asset. So here let's go to the working note. Now what is the total cost price of the asset or cash price of the asset? Price of the asset equals to 3 lakh for one car. 3 lakh into how many cars? 2 cars. So cost he has purchased 2 cars into 2 equals to 6 lakh. Minus down payment. What is the down payment amount? 25% he has to make the down payment. 25% of 6 lakh means what? 6 lakh into 25%. So you'll get 1,50,000. So if you deduct this amount, let's calculate 6 lakh into 25%, 1,50,000. So if you deduct it, you'll get 4,50,000. So you should get 4,50,000. So how many installment we have to pay? 4 installment. So that means how much you should get? So 4,50,000 divided by 4. So we have to pay principal amount 1,12,500 rupees. We have to pay. But what is the actual amount he has given? How many installment he has to pay? What is the amount he has to pay? 1,38,900 rupees we are paying. That means installment amount he has given, not the principal amount. So actual principal amount is this. This is the actual principal amount, and whatever the amount he has given. So 1,38,900 is the principal amount. So that is, this method is inclusive of interest. So this 1,38,900 is including the interest. Now we have to exclude the interest to calculate the actual principal amount. This is the actual principal amount we have to pay for 4 equal installment. So he has given the total amount with inclusive of interest. So we have to exclude the interest. Let's calculate while doing the chart. Now what is the cost price? Cost price is 6 lakh. Okay. Now what is the down payment? Deduct the down payment. Down payment is 25%. That means here we have done the down payment 1,50,000. So we can write principal 1,50,000 as the down payment. No interest. Here also 1,50,000 we can write. 1,50,000. Okay, next one. So if you deduct principal from principal, you will get 4,50,000 minus your installment. First installment. What is the, so for this we have to calculate the interest. So let's calculate the interest on 4,50,000 into what is the rate of interest? 9% is the rate of interest into 9 by 100. So let's calculate 4,50,000 into 9% is 40,500 is the interest. So 40,500 is the interest. Now, so what is the amount we are paying here for every installment? How much we have to pay? 1,38,900. So we have to pay installment 1,38,900. See here, we know the total installment amount. Okay, so what is our total installment? 1,38,900, and we know the interest. So we don't know the principal amount. How to calculate the principal amount? Now, if you deduct this interest from this installment, you will get principal amount. Once again, I am repeating. If you deduct this interest from this installment, you will get the principal amount. So let's deduct 40,500 from 1,38,900. So you will get the principal amount. So earlier in the, so if the installment is exclusive of interest, we have to add the principal and interest. You will get the installment. In case this installment is inclusive of interest, we should deduct the interest, then you will get the principal amount. 1,38,900. So it is, principal is 98,400 is the principal. Now if you add it, you will get the principal. So principal plus interest equals to installment. If you don't know the installment, add principal and interest. If you don't know the principal, deduct this interest from this installment. See, once again I am repeating, if you don't know the principal, then deduct interest from installment, you will get the principal. Okay, if you know the principal and you don't know the installment, then just add the principal and interest, you will get the installment. I hope you are clear. Now deduct this principal from principal. 400, how much you will get? 4,50,000. So you will get 3,51,600 is the amount. Now let's deduct second installment. Okay. Now Every year, we know every year installment, 4 equal installment he has given, right? So he has given 4 equal installment, we should pay 1,38,900, right? So every year installment is same, 1,38,900. And let's calculate the interest on principal amount, not installment amount. We should calculate the interest on principal amount. So let's calculate interest. 3,51,600. What is the rate of interest? 9%. So 3,51,600 into 9%. It is 31,644. Now, we know the installment. We know the interest. Deduct this interest from installment, you will get the principal. Minus 1,38,900. So, you will get 1,07,256. So, 1,07,256 plus 31,644, you will get 1,38,900. Again, deduct this principal from total principal. 1,07,256. So I am deducting, see, principal minus principal, principal minus principal. So again, deduct this amount, how much you will get? 3,51,600. You will get 2,44,344. Okay, again come to the third year. So third year installment, we know installment is same. Say if the interest is inclusive, installment will be same, principal will be changing. Keep this in mind. Once again I am repeating, if the interest is inclusive, installment will be same every year, because he only give the every year installment amount. We have to deduct the interest, we will get the principal. Principal will be changing. If he gives the interest is exclusive, if he gives interest is exclusive, then principal will be same. So if you add the interest, you will get the installment. Installment will be changing. Principal will be same in the exclusive method. But if in case of inclusive method, installment is same, but you will getting the different types of principal every year. Are understanding? So exclusive method, principal will be same. Installment will be changing. Inclusive method, installment will be same, principal will be changing. Okay, next. Again, let's calculate the interest on this amount minus third installment so what is the amount? 2,44,344 into 9%. 2,44,344 into 9%. So you get 21,990. So 990. Okay, let's make 991. If you deduct this amount, if this interest amount from the total installment, you get the principal amount. So deduct 1,38,900. So you will get 1,38,900 minus 21,991. So you will get 1,16,909. So 1,16,909 plus 21,991 equals to 1,38,900. So if you add both the principal and interest, you will get the installment. So if you don't know the principal amount, deduct this interest from total installment, then you will get the principal amount. So minus principal from principal. So this is the current year principal amount. This is the total principal amount minus this amount from total amount. So 1,00,000 16,909. So you'll get remaining amount 2,44,344. So you'll get 1,27,435. Now listen here. In the last year, be careful. So in last year, no need to calculate the interest. Okay, like this. See, we have calculated interest no here. So no need to calculate the interest for the last year. So let's go to the fourth installment. Here it is. Let's write here. So 2,44,344 into 9 by 100 we have done here. Here also for the fourth year. See, for fourth year, here we know the actual installment 1,38,900. And here, since this is the last installment, so whatever the difference you get, if you deduct this installment, if you deduct this principal amount from the installment amount, whatever the difference you get, that is the interest. Once again, I am repeating. So we know the total, it is the last installment, or it is the last principal amount we are paying. So we know the installment amount here. This is 1,38,900, and we know this is the last principal amount 1,27,435. And what is the difference between the both the amount? That will be the interest. That is like adjustment. So if you calculate the interest, it will be more or less. It will fluctuate. It will not exact. If you add all these things, it will not exact 1,38,900. So it will fluctuate or it will change. So that's why for the last year, be careful. You just adjust the amount. Don't calculate the 9% interest. Again, I am repeating. In the last year, just adjust the amount. Don't calculate the 9% interest. How to adjust the amount? Just deduct this 1,27,435 from the 1,38,900. Whatever the difference you get, that is the interest for the last year. Keep this in mind. 38,900. So difference is 11,465 is the difference. So I am adjusting the amount. So again, principal will be same, 1,27,435. So you will get the 1,38,900. Again, deduct 1,27,7,435. So you will get 0, 0. Every year you will get 0. Otherwise, if you calculate the interest now, then you will get some difference here. Because here we got some difference like, no, point something we got the difference. That difference reflects here. That's why we should adjust the amount. Like this, we should calculate the total interest and principal and installment. Now, let's go to the calculation of depreciation. Here, in this, since it is a journal entries or ledger entries in the books of installment seller, no need to calculate depreciation. We can directly go to the problem. So, why we are not calculating depreciation here? Because asset with whom? Who is having the asset? Hire purchaser is having the asset. So, his duty is to calculate the depreciation, and the seller is not having any asset. So, no need to calculate depreciation in the books of seller. Now, first year, hire purchase. What is the actual cost of the asset? See, what is the actual cost of the asset? 6 lakh, right? Hire purchaser account deduct to asset account. So, 6 lakh being asset sold on hire purchase system. So, who is the receiver? When you sell the asset, who is the receiver? Hire purchaser is the receiver. What is going out? Asset is going out. So, debit the receiver, credit what goes out. Both is compound journal entry. Next one. We have to receive the down payment. So, 25% of the amount he has paid the down payment. No. So, when you get the amount, what is coming in? So, cash is coming in, or he is paying the check. When he pays the check, what is journal entry? Bank account debtor. Who is the giver? Hire purchaser account. So, bank account debtor to hire purchaser account. So, how much he has paid? Let's see here. So, what is the down payment he has paid? 1,50,000. So, let's write 1,50,000. Here also 1,50,000. Next one, hire purchaser account are two interest accounts. See here we have to show interest is due. What he writes, hire interest account are to hire seller account he writes in his books. But in our book what we have to write, hire purchaser account are to interest account, being the first year interest is due or interest is receivable we have to show. So what is the first year interest? Let's go to the here. So this is the first year interest. This is the 40,500 is the first year interest. This is the first year interest, right? First year interest 40,500. So 40,500, 40,500. I hope you are clear. So interest we have to show. Interest is due from whom? Hire purchaser. Next one, we have to receive the installment. Same entry like second entry. So when he pays the amount, we receive the amount. So but he pays in check. Who receives the amount? Bank will receive. Who is the giver? Hire purchaser is the giver. Journal entry is bank account to hire purchaser account. In the books of hire purchaser, what he will write? Hire seller account to bank account he will write. What we will write? Bank account to hire purchaser account. Keep this in mind. So how much what is the first installment he will give? He will give first installment 1,38,900. So 1,38,900 to hire purchaser account 1,38,900. Now let's go to the next. So interest we have to transfer. Interest is a profit for the hire seller, but same interest is the loss for the hire purchaser. What he will do in his books? So he will do profit and loss account to interest account to depreciation account. But what we will do? Interest account to profit and loss account. So we are right. It is a profit for the hire seller. So interest account to profit and loss account. Why we are writing profit and loss account in credit side? So what nominal account says? Debit all expenses and losses, credit all incomes and gains. No. So that's why we are writing the profit and loss account in credit side. So what is the interest? See, this is the interest 40,500. 40,500 we should write, being the first year interest transfer to profit and loss account. Now let's go to the next year. See, from next year only once we will sell the asset, and only once we will receive the down payment for the first year. From next year no selling entry and no down payment entry. Okay, from next year we should start from being the second year interest due and second year installment received, and third one is second year interest transfer to profit and loss account. See, I have missed the date. I will write here. So when we are going to purchase the asset, we purchase the asset on, see, this is the date of asset. Let's write the date. So this is 1st Jan 2018. This is 1st Jan. Now let's write the date. So on every year, so when the customer comes to the showroom, he will purchase the asset. On the first day, he will purchase the asset. 1st Jan or 1/1/2018, we will purchase the asset. Again, on the same day, he will make the down payment 1/1/2018. Again, at the end of the year, from 1/1/2018, what is the end of the year? 31st December 2018, he has to calculate the interest after 1 year. So that is 31/12/2018, he has to calculate the interest. On the 31st only, he has to make the installment. 31/12/2018, he will make the installment. On the same day, 31/12/2018, he will transfer the interest to profit and loss account. Next, go to the next slide. See, first year down payment, asset selling entry, down payment receiving entry, and remaining 3 entries are interest is due or receivable, installment received, profit and loss transfer to interest is transferred to profit and loss account. From next year only 3 entries. What are those? First one, interest is due or receivable. Second one, installment received, and the interest transferred to profit and loss account. Okay, so date is 31st/12. Last year is 2018. Now 2019. 19, hire purchaser account to interest account, being the second year interest due or receivable. So what is the second year interest? Let's check here. See, what is the second year interest? This is the second year interest. So 31,644 is the second year interest. So here 31,644. Wait. So 31,644 accounted to interest account 31,644. Next one, same date 31st/12/2019, bank account to hire purchaser account. What do you mean by that? So we have to receive the amount. So how much amount we will receive? Second year installment we will receive how much? See here, second year installment we will receive 1,38,900. So here 1,38,900. Here also 1,38,900. Next, interest is, we have to transfer the interest to profit and loss account. So that is the profit for us. So how to transfer this? What is the interest? So 31,644. Here also 31,644. So being first year interest transfer to profit and loss account. Again for next year, this is 2018, 31st/12/2019. For next year is 31st/12/2020. For 20 he has to do hire purchaser account to interest account, being the third year interest is due. What is the third year interest? Let's see. See, third year interest is 21,991. So 21,991 to interest account 21,991, being the third year interest due. Let's go to the next entry. What is the next entry? Same entry for remaining 3 years. Three entries. For first entry will not come. What is the first entry? Asset selling entry. Second entry is down payment. And after all, three entry. Interest is receivable, installment received, interest transferred to profit and loss account. So third entry is bank account to hire purchaser account, installment receivable. What is the installment? Every year installment will be same. This is the, so 1,38,900. So 1,38,900 to hire purchaser account 1,38,900, being the installment received, and interest transfer to profit and loss account. What is the third year interest? So already we have 21,991, 21,991, 21,991. Here also 21,991. Next one, same. First year, this is the for last year. What is the date? Let's write date here. 31st/12/19. Here also 31st/20. 31st/12/20. This is 31st/12/21. So we have to make the entry like higher purchase account to interest account, being the interest is receivable. What is the last year interest? Let's see here. So it is 11,465. So 11,465 account data to 11,465. So higher purchase account to interest account 11,465. Next we have to show the amount installment received. What is the installment? Bank account data to higher purchaser account 1,38,900 will be same every year to 1,38,900 every year same. Next one, amount, that is the 31st/12/21. Again last year 31st/12/21. Interest account data to profit and loss account. What is the last year interest? It is 11,465. 11,465. So see, this should be for this. This should be for this. Like this you have to write. Keep this in mind. So like this we have to do. This type of problem will be asked for only 10 marks. Keep this in mind. So for next session we will discuss problems on ledger in the books of hire seller. See, we have discussed journal entries in the books of hire seller. In next class, we will discuss on ledger entries in the books of hire seller. So ledger, what we have to prepare in ledger entries? We have to prepare hire purchaser account, and asset account we will not prepare because we don't have the asset. So, and we have to calculate the interest account. So, interest account, ledger entries in the books of hire seller, for 10 marks they will ask. So, we have to prepare hire purchaser account and also interest account, only 2 accounts ledger. See, in the books of hire purchaser, we have to prepare 4 ledger accounts. Keep this in mind. So, one is hire seller account, interest account, depreciation account, asset account. In the books of hire seller, we have to prepare only 2 accounts. What are those? Hire purchaser account and interest account. No depreciation account, no asset account, because the asset, we are not having the asset with us, and we will not also calculate the depreciation. Hire seller only prepares hire purchaser account and interest account. Hire purchaser will have to prepare 4 accounts. What are those? Hire seller account, depreciation account, interest account and asset account. For us, only 2 account. This type of problem will be, you can expect this type of problem for 10 marks. So, my dear students, next class we will discuss the ledger entries in the books of hire seller. Till then, thank you so much. If you have any doubts, you can comment below. So, we'll try to rectify all your problems and doubts. Till then, thank you so much. Let's meet in the next session.